Good morning, ladies and gentlemen, and welcome to the Present Energy Investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available on your Investor Meet Company dashboard. I'd like to remind you that this presentation is being recorded. Before we begin, I would like to submit the following poll. I'd now like to hand over to Peter Levine, Chairman and CEO, and Rob Shepherd, CFO of Present Energy. Good morning, gentlemen.
Good morning, Mark. So I'm, as Mark says, I'm Rob Shepherd. I'm Finance Director of President, and on the call is Peter, our Chairman. We've split responsibility. I'm going to run through the presentation. I've put together a number of slides just to basically look back at the last 12 months. As this is off the back of the AGM, I'm assuming I've made the assumption that most of you will be shareholders, so there's an amount of detail in the back of this presentation about our operations, but I thought I'd just focus in on what's happened over the last 12 months, where we think we sit as a business, and then obviously move on to the key part, which is the Q&A. I think we've had something like 15, 16 questions already submitted. So we'll run through the ones that we're able to answer. And then obviously, as Mark said, there'll be an opportunity to raise questions as and when. Just a very quick background to myself, for those of you who don't know me. I'm originally a mechanical engineer. I was with Shell for 4 years, did an MBA, became a banker. I was an oil and gas banker for about 10 years. Did a lot in, it's very flavor of the month at the moment, in Russia, Kazakhstan, Africa, some Latin America. I've known Peter since 2006, I think it was. Had some involvement with his previous company, Imperial Energy. Then became a non-executive director at President, I think in 2016, 2015, and have been, for the last couple of years, finance director. So I'll just move on to the presentation. The front slide, I can't remember if I took that. As I tell people on some calls, aside from being finance director, I'm also a part-time photographer. So this was potentially one of my visits down to our key asset, Rio Negro, in Argentina. It's an asset that we acquired a couple of years ago from Chevron, and it's really around this asset that we've transformed the company and have increased our interest in and around that area in Argentina that we can talk about as and when questions come up. Thanks to all of you that joined. I think as we're in the waiting room, there was something like 35 people. Hope everyone is safe and well during this difficult time. And it's sunny out there in many places. And thank you so much for taking the time to listen to this presentation. Again, we hope we'll answer what we can, and don't hesitate to, if there are follow-up questions, to let us know. If we look at basically the last 12 months, probably one of the key developments has been the fact that Trafigura, who are one of the largest oil and gas traders in the world, have very active activities in Argentina. They own the refinery to which we've been supplying. They were buying crude from us. They supported us with a financing facility, and they've now, in 2 steps, become our second largest shareholder, with around 16% of our equity, and as a result have appointed a representative to the board. We're very excited by this. They see all oil and gas flow in Argentina and in most of the world. So we really are excited about the opportunity to work with them to see if there are further opportunities that we can capitalize on our operating platform and the knowledge and contacts they have within country. They're also extremely important to us because it gives us very clear route to market, which is critical, both with gas and oil. In challenging times, you want to be able to sell your product, and having access or having clear alignment with a significant player like Trafigura means that there are situations where we're able to continue producing where others may not be able to do so. So we're really excited by this, and that's why aside from a lot of the other exciting and positive developments for the company in terms of improving the robustness and the stability, the fact that Trafigura has come on, I think, has probably been one of the more significant developments for us over the last 12 months. We've all, like all oil, gas, and in fact any companies, have had tough times. But what's important for us is that even through Q2, the really difficult period in Argentina and around, we've continued to generate cash profit, and that's extremely important. Obviously, that demonstrates the resilience of the platform, and that we think positions us well for the future. There's been a real keen focus on costs. The fifth bullet point, we talk about the per barrel operating costs have further reduced year on year. If we look at the first half of 2020, we're down to just shy of $17 per barrel of oil equivalent from almost 20 the previous comparable period. So that's down by 14%, and that's an average number over that period, and there continues to be a sustained push on reducing costs. We can do little about on the revenue side. We obviously technically can make sure that we operate to the best of our abilities, but what we can have most control over is cost, and we're very good, led by Peter, at making sure that we capitalize where we can and seek optimal payment terms and make sure that we're getting best value for shareholders' money, because we respect, and obviously those of you that are shareholders understand that with Peter as a 29.9% shareholder, there's an extremely high, unprecedented level of alignment between the executive management and shareholders, and when times are hard, that really stands out. We look at reserves. Whilst the top line reserve level has moved slightly, what's really relevant, and something that some people miss, as I'll come back to and pick out in a couple of slides' time, is that what's really relevant is that we've increased our share of the higher value Neuquén Basin reserves. So they increased year on year by over 20% and are just over half of our total reported 2P reserve base. So that's something that's positive for us, and it's obvious for those of you that follow industry or follow the oil and gas business, a barrel is not a barrel, and what's important to us is that our higher value barrels, we're increasing the value, and that's great in the near term for shareholders. Something that's very hot on shareholders' minds, obviously, is borrowings. And as we set out, if we look at where we were at the time of the last AGM in 2019, we were at somewhere around $28 million of borrowings. Obviously, prices, revenues have declined subsequently, and so companies that have been unable to reduce their debt in the same way have suffered, particularly those with strict covenants. And so you hear a lot about restructurings of debt and challenges with covenants. That's something that is certainly not an issue for us. We now have somewhere around $14.5 million, of which just under $4 million is amortizing to a bank in Argentina. There are covenants associated with that, financial covenants and such like. But the balance is to one of Peter's affiliated companies, and so we call it covenant light. And Peter has continued to support the company and be reasonably flexible in terms of whenever we've looked to in previous years to extend maturities, as we've done more recently. It's not something that's given us any cause for concern, which is quite important when prices are currently quite weak. Debt is not something that troubles us overly at the moment. G&A is another important focus, and as we set out here, we've reduced group G&A for the 5 months to the end of May to just shy of $2 million, and we're I think reasonably proud in a way. The days are gone where little companies like President and others have expensive office space and overheads that eat up money that otherwise can be reinvested in value creation as opposed to G&A. I'm aside from the fact that we're obviously working our way through a pandemic, I'm sitting in a house in southwest London, and it's actually no different to how I would have operated pre-pandemic, because we have no office in London. We have some 20 colleagues in Buenos Aires, but in London there's no office, and there hasn't been since I've been involved in the company, and that's really the way it should be. We don't need to be spending money on a shop front in London when we can actively engage and communicate via the media that everyone is now catching up with. Argentina is relevant. I think we externally perceptions suffer from the fact that the majority of our operations are in Argentina, but all we can say is that certainly since I've been involved in the company in the last couple of years, the external environment, the macro environment within Argentina has been very challenging. But what's important, and I did a lot as a banker supporting projects in politically challenging economies and countries in West Africa, in Russia, in Kazakhstan. And what's actually important is to look at the underlying risk as it relates to that investment. And I think it's for those that are willing to take the time to look at what one reads in the paper about Argentina, what impact and what consequences that has for a business such as President, you'll actually see that there's relatively limited. People will talk in any environment or any challenging environment about a flight to quality. Within any environment where there are challenges, there will always be winners and losers. You look in our economy in the UK, there are winners and losers from a pandemic. So why people potentially look at Argentina and discount it as a risky investment regime, that approach creates opportunities for those that are willing to recognize that within the headlines, there are investment opportunities. And it's no different to what we're seeing in the UK, and it's certainly no different in Argentina. And as we've said, there's a very volatile currency, but I think in cash terms over the last couple of years, we know it's a volatile currency, and we're set up to deal with that accordingly. And we've probably lost less on a percentage basis than companies that are exposed to dollar sterling or sterling euro, because this naive belief that the sterling is stable and not then set up to deal with the extreme volatility that we've seen over the last couple of years. We understand that in Argentina, and we're set up to deal with it, and have been quite successful in doing so. If we look at the next, so that's really where we've been over the last 12 months. And the next slide, we've announced details of what we're about and what we're looking to do in half 2 2020. And the first set of activity by end of August is some workovers, so reactivating currently not producing wells. And it's relatively small stuff. If you look at the numbers in terms that we've guided, 3.5 million scuffs a day of gas targeting, and 50 barrels of oil equivalent per day, barrels of oil per day in fluids. But it's important, and there are a number of other wells that over the last couple of years that we've reactivated. It's relatively low cost, and the investment cost for the return is quite limited. And we're looking, in this case, Estancia Vieja. I think those of you hopefully can see the picture. That's one that we include in our corporate presentation. Estancia Vieja was an asset we bought a couple of years ago from Chevron, late life asset, predominantly gas. And what's really critical about gas in any environment is the ability to monetize that. And those of you that have followed the company will be aware that last year we bought Las Pasas. We signed a concession for Las Pasas and up in the north, and as part of that, and Puerto Prado, and with that came access to gas infrastructure. So gas resource is not particularly useful if you're not able to monetize. The important thing about our Rio Negro assets is obviously that we are able to now monetize. So that gives us confidence to look at reactivating some of these wells and an easy route to monetize. Next slide. So next set of activity is back to drilling. The old adage in the industry is the best time to be drilling is when nobody else is, because there are a lot of rigs lying fallow at the moment in Argentina and obviously elsewhere. Prices are low, companies are dealing with debt issues and are struggling to progress some of commitments and or look to increase production and or monetize resource. We're in the fortunate position of being able to progress, and we're certainly not shy in engaging with our contractors to make sure that both sides can benefit from a relationship. A rig operator sees no benefit from stacked rigs, and there are very few rigs acting in country right now, so that's actually a good time for President to be looking at progressing drilling. So planning is going full speed ahead to drill 2 wells. One is Las Basas, as we show, that's top middle in the picture, the asset we acquired just over a year ago, mid to end September, and an exploration well, Estancia Vieja North, thereafter, some 20-25 days thereafter. Again, we set out the production numbers. These are low risk, and we're very keen to progress the drilling of those. And what's important about EVN X1 is that it's targeting a new structure. So again, it's part of the company's strategy to look again at assets that have been held by other companies for some time. We, as the new owner, see opportunity that has been missed or left, and this is a really good example of that. The team have been working extremely hard. We've had good production data. We're able to look at tying new activity to some of the existing data we have, and with confidence progress on opportunities that we see, like Estancia Vieja North, that has the potential to increase our reserve base, and also obviously in the near term increase our production. So off of the back of that, we're looking at somewhere around in excess of 3,000 barrels of oil equivalent per day for the second half, which is consistent with current levels of production. We'll be giving an update on that at the earliest opportunity. If we look at 2021, so that's the sort of second half activity. As everyone understands, the industry, there are you plan ahead clearly in terms of preparation, but your forward plan is then guided by the near-term plan, or the success or otherwise of the near-term plan. But we're currently looking at drilling a couple of wells in the first half of 2021. Again, a development well, infill development well, and the second an exploration well. And we set out some information around the potential for Vinderman, an undrilled structure that we think has real potential, and so it's something that we're looking to put onto. We've got on the schedule, and that's part of the discussions we're having with the drilling contractor to let him see that we're looking to roll this year's program into an active program for next year. And again, as we say in the second and third bullet points, there are important to note that this is in a what people term a brownfield area. We're close to infrastructure. We have an operating team, and so the incremental cost to us of bringing successful wells into production is relatively low, and other than the case it would be in a greenfield area, for want of a better term. So building on our two elements is bringing our reserves forward into production. So we have a reasonable size, for want of a better term, hopper in terms of 2P, 3P reserve, and activity that we carry out can bring 3P to 2P, 2P to 1P, and also can actually add reserves that are outside of those existing independently certified reserve base. Again, the last bullet point, and that's where we're importantly flexible with our schedule. Another element with President is that we got cracking early on when we picked up the licenses, and so are not under any real pressure other than the outer duration of the concession, that, as we said in an announcement, we're looking anyway to extend, but we don't have a ticking clock in terms of a commitment to complete certain activities within a certain period. That means we're not forced to refinance or pursue additional financing at a less than optimal time. So we're comfortable with where we sit, and as the industry, as the demand starts to pick back up, we will cash generation will recover, and we can then through negotiations with our offtake, with our supply, with our service providers, make sure that our expenditure meets our ability to fund. So if we just look at, again, this is slightly looking back and just a snapshot of where we stand. We worked really hard in 2019. We had some challenges in a macroeconomic sense in Argentina. And obviously, as we were coming out of that challenging year, the pandemic struck, but we've got solid foundations, and that's where it's key. We're not building a house of cards. We already had a reasonably stable production base on 2,400 barrels of oil equivalent. Turnover for last year was somewhere around 40 million with an adjusted EBITDA, so stripping out distortions of somewhere around 12 million. Dated Brent, obviously through as a result of the pandemic and the standoff between OPEC and non-OPEC members have led to prices coming down, and so our continued focus on ensuring lowest costs as we think has seen us through the storm, and now we are well placed to face up to the opportunities that we see ahead of us in the second half and into 2021. Just to look at, and some of you will have come to President at different times. There may well be some of you that have been in from the start, and all I really wanted to do with this slide is just to highlight that what has gone on inside the company. And I get at the end of the day, shareholders measure value from the value of their shares, and we're very aware of that. And Peter, I wouldn't say more than most, but of everybody, I think, on the comparable company sees that more, given his sizable shareholding, all of which has been acquired for cash, not through free shares or free options. If you look at the underlying performance of the business, it's been an extraordinary transformation over the last few years. And on a relative basis, we think that hasn't been fully accounted. Now, I think some of that is an industry-wide. Obviously, there are challenges with people's interests moving from so-called non-renewables to renewables. Small cap, illiquid are all things that companies of our comparable size have seen as challenges, as external challenges. But the underlying value that we believe has been created within the business is evident from these analyses, and it's therefore incumbent on us as management to help see that transformational change over the last few years is better articulated and is presented out to the market, which is why we're doing more. I think in the last month I've done 2 webinars. We've now done this presentation. Some of you will have seen that we've changed broker. That's all part of helping us get out and tell people our story. Other companies may have more of a challenge, or the inherent issue within other companies may be the intrinsic value. We don't see that as the issue for President. The issue for President is to get out and tell the story, hence why we're on this Zoom call, wrong platform, on the Investor Meet Company call, and are availing ourselves to answer questions, and Peter will take the lead on that once I've done with this presentation. So just putting that into context, this is information from one of the analysts that follow us. So we're obviously talking to people that look at oil and gas stocks. It's a different discussion to have with someone that's considering investing in a supermarket or an oil and gas company. But you're on this call because you're looking at oil and gas stocks, and we recognize that we don't operate in a vacuum. And so whilst we can talk about the value we've created with inside President, we recognize that each and every one of you has 20, 30, 40 companies that you can potentially look at. Some of you like exploration more than production. Some of you like production. Some of you like Shell. But what we've done here is with our analysts, we've taken a subset of basically Latin American producers. So a regional, some of you may prefer Africa to Latin America, so that's not included here. But what we've done is to try to create a peer set to say, well, how do we sit? And we didn't, as people will know, it's possible, as my former life as bankers, to create league tables where you always come out on top. But we had no such guideline set to our analyst. I asked him yesterday to create this. Where do we sit on an EV to 2p? So where do we sit in terms of the asset, what's in the ground essentially that is within the company? And we sit quite low, roughly middle of that top left chart is the average. And we sit clearly well below average. So in terms of assets in the ground or value in the ground, we sit quite low. The assets and value in the ground is kind of, say, relevant. It's clearly not irrelevant because that's the intrinsic value. But what's also key is to look at, well, what is being monetized? If there's 20 million barrels sitting in the ground and it's impossible to monetize because you're sitting in a jungle or you're 3,000 miles away and reliant on a pipeline that doesn't have capacity, an EV per 2p barrel is kind of irrelevant. And in that instance, you then look at an EV per flowing barrel, which again, if you look at the average sits, I think that we've included the average on this one, sorry, but we sit in the lower half of that analysis. So again, those of you on the call will have investments and will recognise a number of these companies. And all I wanted to do here is to give you a way to look at President, how we sit both from a longer term value in terms of a reserve metric, but also on a flowing barrel basis. We sit at the lower end in both cases. So just to summarize, because I think always the Q&A on this is actually more relevant. This is obviously words that we've designed, but it's more relevant to listen to shareholders who have questions. And we know the number have been provided ahead of the call and a couple have appeared. So we'll look at the ones and Mark will help us work through the ones that we're able to answer. But if we look at, I say why continue, I'm assuming that most of you will be shareholders, some of you will be looking, but what's relevant when considering whether or not to invest in an oil and gas company these days or a smallish oil and gas company? So two things I think are quite important. Overheads. Overheads, you require a minimum overhead obviously to operate, but what we try to do is to push as much as we can down to operations. If you're not actually producing a barrel of oil or a scuff of gas, you need to make damn sure that what you are doing is actually useful, because that's eating into shareholder funds. And as I have said earlier, we're kind of unique as a company in that 29.9 cents of every dollar we spend is Peter's. So hence the fact that there's no office in London. We fly in the back of the aeroplane when we fly, or we fly with Norwegian. And so we're keenly focused on cost. Others have come late to the party. It's a necessity. Some of that is really through running out of cash. Others it's because of shareholder activism. And we've got as I tell some people, we've got a shareholder activist on the inside in our chairman. Negligible debt. As I said, $10 million, $14 million is clearly not negligible. But in the context of understanding that some 10 million of that sits with Peter, who clearly has strong equity alignment, and obviously his name's on the tin as chairman. That's relevant. So if we actually look at the debt that is with a true third party, it's around about 0.3 times 2019 EBITDA. So when you hear other companies talking about 3 to 4 times EBITDA, that sort of puts this into context. It's debt is something that takes a disproportionate amount of management time in challenging situations. Ownership's important. We believe, and a fundamental tenet of the company is to focus on maximizing your margins, minimizing your costs, and the best way to do that is to be in control rather than sit on the sidelines and try to direct an operator, a third-party operator. Assets are all conventional. There's been a lot of talk about unconventionals in Argentina. We're purely conventional. We try to do things in a straightforward manner. Again, it's a focus on low costs. And infrastructure, as mentioned, if you're sitting with stranded gas dependent on somebody else's infrastructure, that can be a challenge. The reserve may look the same, but a reserve is only a reserve if you can actually monetize it. Organic growth potential. We talk about the potential acquisitions, and we are actively considering opportunities, particularly now that Trafigura have entered onto our register. But the important thing to note is that we're not dependent on inorganic growth. We have growth potential in our existing resource base, but we'll clearly look at the right opportunities. And we think the fact that Trafigura is elected to come onto our register, having visited our assets, having seen how we supply product, we think is a mark of the way that they believe that we're able to operate. And we're relatively confident that in discussions we've had with them, there are other opportunities that they have seen and feel that potentially could better suit within President. And that's, but it's not a must-do. We're not dependent on a deal to create a story, and that means that we're in a better position. We're not chasing top-line production for the sake of it. We'll look at opportunities where we can add value, where we think existing management have taken their eye off the ball. Those are the sorts of opportunities we'll look at, but we won't be rushed into a deal. And so in summary, profitable assets that have stood the test of the last 6 and specifically the 3 months. No debt burden. We have some debt, but we're amortizing with our bank, and a very serious team. Hopefully that comes across and will continue to come across in the Q&A that Peter's going to lead. And then a strong shareholder base, obviously outside of Peter and Trafigura, who I've mentioned a couple of times. We have Schroders as a material shareholder, so that gives us a layer of institutional oversight, and we as a board make sure that we operate the company as we should, to try to reduce any corporate type risk, so that shareholders are then just able to focus on the underlying risks in Argentina that we've talked about and in oil and gas more generally. But it's really about making sure that shareholders don't need to worry that anything untoward is happening within the corporate. And I think that is me done.
Brilliant. Thank you very much, Rob. That's absolutely awesome. Thank you. Ladies and gentlemen, please continue to submit your questions. You can do so using the Q&A tab situated on the top right-hand corner of the screen. But just while the company take a few moments to review those investors' questions that have already been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Before I hand back to Peter, particularly for the Q&A, I'd like to remind investors that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Peter and Rob, obviously investors had the opportunity to pre-submit questions ahead of today's event, of course, of which you've had the opportunity to review. And as requested, I would propose to ask you all of these questions, and then perhaps move on to the live Q&A, if that's okay with you guys.
Yes, that's fine. Hello, everyone. It's Peter Levine. For the avoidance of doubt, I have requested that every question be put to us, and whilst we've got the ability to filter questions out and not answer them, frankly, I don't think we see any reason why any valid question cannot be put to us, and we would answer any question that's put. So over to back to you.
Thank you very much, Peter. So the first question that was submitted, as a corporate investor in President, why is it that no one from Investor Relations makes contact, and you don't have a base in the UK where questions can be asked?
Right. Well, the first part of that question is, if we don't know who you are, we can't work with you. I don't understand necessarily what a corporate investor is. If it's an institution, obviously we welcome every investor, whether it's somebody who owns 1 share or somebody owns 20 or 40 million shares. But the bottom line is that we need to know who you are. We can only go on the share register, and a lot of the shares owned in the share register are owned through nominees. So we try to communicate, and we have investor relations now increasingly, where we advise people about Twitter, advise people on the latest RNSs. But if we don't know who you are, I'm sorry, we can't answer that question. And the second part is, why don't we have, to what base do we have questions submitted? Well, they can be submitted through our website and through our info address at presidentpc.com, and that's the way to do it. And no, we're actually very proud of not having an office for the reasons which Rob has quite correctly identified.
Thank you very much. The next question, your company has raised funds recently via a placing. The share price is constantly suffering from 12p to 1.5p. How can you reassure investors that there will not be a consolidation of President Energy?
I'll just answer that direct question. The fact of consolidation, we interpret in that question as consolidating it, so instead of having 10 shares, you end up with one share at 10 times the value of the original share. And the answer is that we haven't considered this, but our current brokers say that they advise us against consolidation to a higher value share and leaving our shares as a penny share. That's their advice. I can only say that's their advice. If advice or views change as to marketability of shares, then we would consolidate it. If that question, however, relates to a placing, i.e. if there's going to be a placing in the future, there is no placing which is envisaged in the future currently at this moment in time in current circumstances. So that's the answer to all of the questions and one which may be associated with it.
Thank you. There is the next question. There is speculation that you may take President Energy private and delist from the London Stock Exchange. Can you confirm if these rumours are correct?
Yes, there are rumours. Yes, I've been asked the question, and my answer to that is always that there are no current plans to do so.
Thank you very much. Would you be interested in raising further monies via a placing to a corporate investor? If so, we would be interested. I think again, Peter, as you said, it'd be nice. I guess we can probably help you in connecting perhaps afterwards. But that's the next question.
Well, the answer is that we don't envisage any more placings, and if people want to become shareholders in us, then there's lots of liquidity in the market, and please do invest in our shares.
Perfect. The next question, would President consider a merger or tie-up with another company?
We never say never, so everything is on the table, but there's no present plans to do so.
Thank you. Are you interested in buying more oil and gas assets, or are you only interested in obtaining licenses from the Argentinian government?
We are interested in buying appropriately producing hydrocarbon assets, and it may or may not include, as a subset of that, taking on licenses from the provinces, not from the government in Argentina. But also, I want to flag the point that this may not simply be relating to Argentina. We are looking elsewhere, although nothing material is there to talk about at the moment.
Okay, thank you. I think kind of linked to that question, are you looking at any countries to expand your operations?
Yes, we are, but it's inappropriate at this moment in time to say where or when. And also, I think that it's fair to say that the emphasis going forward will be on the word in our title, energy. Energy includes many things, and we are opening our eyes to the word energy and every aspect of energy. Beyond that, I can't say.
Thank you. Follow-on question. What is the exit plan, if any, for President Energy? I guess it's somewhat an open question, but over to you.
Let's get the share price up, let's get the value up, let's get the perception up, and let's make it much more of a success and go from strength to strength. And then we can look at potential exit strategies or otherwise. The most important thing at this moment in time is the company, is its welfare, is its growth organically and by way of the right acquisitions.
Thank you. I guess this information is publicly available anyway, but it says, what is the latest percentage shareholding stake that senior management have in President? I think you may have addressed part.
Yes, it is. It's on our website, actually, and it's about 30.5% in relation to the management itself. And Trafigura own just over 16% of the company, between 16 and 17% of the company. It is on our website, and anyone who wants specific details, please refer to that.
Thank you. Next question. Would you consider selling assets for profit taking and then reinvesting the profits into purchasing other undervalued assets?
Yes. Next question.
Thank you. You advised previously that President have been selling oil continuously, but have not received the $45 barrel price since the decree was passed in May 2020. I've read a report that the Neuquén province is pursuing oil companies which have sold oil below the $45 price for royalties it may have lost out on. Will this have an adverse effect on President?
Well, if the provinces insist and it is enforceable in law, which we doubt because there is judicial precedent to say it's not enforceable, that the provinces insist and will get 45, it won't necessarily, because at the end of the day our management accounts provide for, when we do the accounting, provide for the fact that this is a contingent liability, the difference between the price that we actually get for our oil, which is at the moment less than 45, and the $45 price. However, as I said, there's clear judicial precedent. There's many oil and gas companies in similar situations who aren't, most of them in fact, who aren't paying the $45, aren't paying royalty on the basis of the $45, but it won't affect us in any material way. As I said, we are already providing for that in our management accounts and our modelling. Naturally, it's in our best interest to maintain what we consider to be the legal position, which is we pay royalties on the amount, based on the amount of realisations that we actually receive. So,
thank you.
To answer your question, yes, quite correct. There is a debate at the moment between certain provinces and Neuquén particularly, Neuquén and providers, but will it affect us in any material way? No, because we provide for it in any event as a contingent liability.
Thank you very much. And really the final question that was pre-submitted, and then I guess we can turn on to some of those that have been asked during the meeting, although again I think you may have addressed some of them, but we'll come to those in a minute. The final question is regarding the gas production in Rio Negro, which will hopefully have risen considerably this year. Are you able to provide the net back gas price, and how will any possible gas price floor decree affect President's future investment decisions?
Yeah, currently we are selling gas in two main directions. First of all, with the assistance of Trafigura, in conjunction with them, to Camesa, which is the main national power company, through the auctions, which we're very successful in winning with other companies as well. So, and also secondly, direct to other power companies. The average at this moment, and I'm talking about June/July, is approximately $2.6 to $2.7 dollars per million BTU, British thermal units. The 3.50, which is referred to in that question, is a publicised proposed amount payable in a gas plan promoted, it's rumoured, alleged, by the government to ensure that there is not going to be a deficit in gas going forward. My particular view, and the view of people who are far cleverer than me, is that there will be a deficit going forward because the fact that the amount of drilling and investment has virtually disappeared in Argentina, and Argentina is a domestic market and a growing market. It needs gas. It imports gas. It's not an exporter. I think it's inevitable that the gas price will go up. I think it's inevitable that there will be a plan, but the gas plan and how much is being paid is part of the debate, and whether that amount of 3.50 per million BTU is going to be paid for accretive gas over and beyond the existing gas production of the company is again subject to debate. So I'd rather not comment on that, because at the moment there's no law about it, there's no provision about it, and therefore at this moment in time we are predicated on the figures of 2.6, 2.7, and we're in winter time. It's getting colder, so it's probably going to go up. Next year, will it go up in our view? Yes, it will, in our view. And also, in our view, the traditional differential between the summer and the winter, which was very significant, it's over 100% in previous years, will actually erode. And it will erode because of the deficit in gas, which is now, in our view, inevitable coming in because of the lack of investment now. And as Rob has quite correctly said, there's very little drilling activity going on. I believe last week there was only 5 drilling rigs being used, and all of those drilling rigs were unconventional. As everyone knows who's a shareholder in us, we are solely conventional. And we, I believe, will be one, if not the first company to start drilling conventional wells again in Argentina when we start drilling targeted for mid to end September.
Thank you.
So, next question.
Thank you very much. So, of course, that concludes those pre-submitted questions. We've got about 10 minutes because I know that investor feedback is really important to you guys, and we want to make sure that we can redirect the investors appropriately. So, as requested, I will start at the top and I will work my way through the questions, if that's okay, Peter. The first question we have is from Michael C. Michael asks, what is the level of current production broken down into oil and gas?
We haven't published that at this moment, and therefore there's a limit to what we can say at present. What Rob has indicated in the presentation, you can see it is in black and white, it's there, and also Rob has said that we will give guidance as to not just this year, but next year, as soon as practical, which will be in the not too distant future. So that's all I can say. We will be forthcoming, but we can't do it now. If we're going to give these figures, we're going to give these figures to everyone and not just to a selective audience.
Of course, and I think it's worth reminding.
We've already announced 3,000 BOE is in the region of is what our current production is.
Thank you. And I think it's just worth reminding investors that obviously the company can only answer those questions where it's appropriate for them to do so, given their regulatory obligations as a listed company. The follow-on question here, we've got a question from Jake who asks, thanks for the update as a non-shareholder, very useful. Would you consider a dual listing?
As I said, we're open-minded, never say never, and we certainly have alluded to the fact that we're looking at an Argentine listing in the past. But this is a new normal. Our shareholding, our share value is, frankly, pathetic. In my view, in terms of not reflective of the company. And at this moment in time, I think it would not be appropriate to look at a dual listing, because any dual listing would include having to issue shares on that particular market. And frankly, with a market cap of our size at the moment, I think that it's inappropriate. Get the company to reflective of where it's of its actual position, never mind its potential. And we would look at it, but not now. Thank you.
Thank you. Next question from Ian K. Ian asks, does the company have a hedging policy?
We do, but we don't have any hedges at the moment, and we're waiting and seeing where it's going. I think that we and a lot of other commentators, as well as industry, are looking at the current oil price being range-bound at this moment in time. And therefore the risk is to the, shall we say, upside. There's more chance of it going up because of a crisis than necessarily going down. We don't see it plummeting to the depths, the stupid depths that it did, say, in April.
Thank you very much.
So we're always alert to it, yeah.
Thank you. Question from Ian J. Ian asks, given the company says it's profitable, when will it declare or commit to declaring a dividend?
Well, certainly not this year. We'll revisit it next year.
Thank you. Michael C. Michael asks, there is a clear focus on Rio Negro, but is there any further progress on Puerto Guardian? If I've pronounced that incorrectly, I apologize.
Puerto Guardian. The answer is, to Michael C., the answer is no. There is a clear focus on Rio Negro at this moment in time. Puerto Guardian just takes over. Our concentration there is margin and how to extract as much money as possible. It's fair to say that we've got a lot of oil in storage there, which we can keep in storage for a long time. Oil is like a bank vault. It doesn't go bad, providing it's kept well. And we feel that producing it and storing it rather than selling all of it in Presta Guardian is the best thing, waiting for certain events to happen. So yes, we're concentrating on operations in Presta Flores Stantia Vieja, as you can see.
Thank you. We've got 3 questions coming from Chris W. His first question is, what is your strategy for gas vis-a-vis sales opportunities to create economies of scale in production and unlock additional reserves? And how do you plan to ensure minimal balance sheet impact with the creditworthiness of off-takers?
Well, the good thing is that our principal off-taker is this gas. I think it is, yes. On oil, our principal off-taker is Trafigura, and we don't have an issue there. For gas, our off-taker is the national power company. We don't have an issue there. The only issue on the slight on the downside is they do tend to pay a bit later than normal. So going back to the hedging, actually, we are looking at, because they're paying later than normal and it's in pesos, we do have a policy about trying to protect the value of the peso in a depreciating market. So that, I didn't think that was what that hedging question was asking, but in terms of peso, that's important. Economies of scale, right, well, you just produce more because we've got the pipeline. The infrastructure is add-on infrastructure, which is compressors, which we're doing right at this moment in time in readiness for this. You can see our drilling, what our drilling is. You can see that our main focus of certainly our first well and our workovers is gas. Those are that is our focus, because we're unbalanced. We're still unbalanced, and we believe that gas is something which is a future-proof fuel as far as Argentina is concerned. And the next question is, how do you plan to ensure minimum balance sheet impact with the creditworthiness of off-takers? Well, I've already answered that question.
Yeah.
So the opportunities are there. We've got opportunities within our organic structure, and that's what we intend to do at this moment in time. Obviously, are we looking at opportunities which include gas going forward? The answer is yes. We don't close our eyes to that at all.
Thank you.
Next question.
Are you exposed to YPF risk at all? It is quite well publicised that YPF has stopped paying non-domestic companies. Do you A, see this, and B, does it directly affect PE?
YPF has not stopped paying non-domestic companies where there is a dispute. YPF have certainly reduced the payment to non-domestic companies in terms of outstanding monies. So, for example, and that has been publicised, this is in the public domain. So if a company is owed X, they may have offered X minus 1 or something like that, which, frankly, it's not just happening in our industry, it's happening in every industry because of the crisis. But the bottom line answer is we are not exposed to YPF risk at all. We've got no association with YPF. They're neither our off-taker, they've never been our off-taker. We don't sell to them in any way, whether it's gas or whether it's oil. We're not linked to them. We don't have any joint ventures with them. We're not a customer of theirs, nor are we a supplier of theirs.
Just mindful of time, we've got a few minutes before we wrap up. We've got 3 more questions. Chris W., what do you think of to the Exmar FLNG export project? Interesting or science fiction?
I'll answer any question on President, but I'm not going to answer any question on anything else.
Question from Al B. Al asks, given the success that Peter and the team have achieved in an operational and asset level, what are the key reasons that the market continuously undervalues President Energy compared to perhaps peers who are in a much weaker condition?
It's a good question. It's an excellent question. It's a question I can't answer. I don't know. It's a very good question to me, but we can't answer it. And all we can do at our end, and Rob's expertly done this, and all we can do, and my colleagues as well, who do a fantastic job, is articulate and re-articulate again the messaging as to the company, its credibility, its size. Trafigura wouldn't become a member of this company if they weren't confident as to its management and the future. They are one of the cleverest people in the room, to coin a phrase. They know what we do, they know what we produce, they know how we produce, they know our fields, they've been to our fields. Full stop. End of story. I think that's self-evident.
I think enough said. I think that's absolutely right. And of course, the market price is affected by many things that are way outside any company's control. I think the final question we have is again from LB. Will PPC consider investing in renewables or clean energy?
Yes.
Thank you. Well, Peter, thank you very much. I mean, you've addressed every single question. You asked me to not skip through any, and of course, we thank you very much for that transparency. I don't know if you just want to wrap up, and then perhaps I've got you got a minute to wrap up, and then I can divert investors for feedback.
As always, we're very humbled by the amount of interest that's shown in us. Thank you very much for joining us. We are open, we are transparent, we try to tell you as it is. Sometimes we get it wrong, we're fallible. Sometimes our hopes or projections, for one reason or another, don't turn out the way it is, and sometimes they turn out better. But what we do is, not only do we put our money where our mouth is, but we put our time, energy, and enthusiasm into what we're doing. We've got a successful company. We have good people working for us. We have a footprint not simply in Argentina. We've not mentioned Louisiana as well. We've got Paraguay. We've got excellent shareholders. And I want to thank all of them and all of you, not only for their support, but their interest in the company and their belief in us. So thank you very much, everyone. Thank you, Peter. And thank you, Rob, for updating Investor Day, particularly given the restrictions that I guess COVID-19 has had on investor engagement, and you've had a tremendous turnout on today's call. As I said before, could I just ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, then the feedback page will appear. However, if you accessed it from the link in the email, you'll be asked to just simply log in and the feedback form will appear. But that your feedback is very, very important. On behalf of the company, President Energy, Peter, Rob, and Investor Meet Company, I'd like to thank you for attending today's presentation. That now concludes today's session. Thank you.